Hello, it is the 10th day of April, 2023. It's amazing how fast this year is going. I don't know how you see it, but I'm like, every time I blink, we've lost a week. We've been working really hard. So let's talk a little bit about what's happening in the world from an investment perspective. I know that last time I did one of these, a little long, so I'm going to try to keep this one fairly brief and see if we can move right along. So the markets have recovered from last year, but they have not recovered to where they are. You know, my view of that is, of course, there's a lot to it, but I mean, some of it has to do with money supply. Some of it has to do with interest rates. There's a lot of stuff moving around. People hear all kinds of stuff on the TV and the internet and the radio. So just judge for yourself what's happening in the world, and you know, happy to talk to you, but in my belief system, I don't think that anything radical is about to happen outside of just market volatility, indecisiveness, people trying to be in the right place. If you look at, for example, the first chart I have up here in no particular order is what oil looks like. Now, this is not the price of oil. So understand, I'm just using Barclay's little ETN here to have an example of what happened over the last, in this case, 5 years. So oil bounced around up in here, dropped like a stone in 2020, and then oil has been pricing up, reaching a high back last June. So again, this is not the price of oil. This is just something I can use to show you how it trades, perhaps. This thing buys futures, and it's pretty accurate. So oil has dropped down, and now it's moved back up a little bit. Had quite a gap. If I give you a one page, you're looking at a five-year chart here. Let's just do a 6-month chart so you can see that oil moved up, and then the Saudis basically said they're going to cut their production, so the price jumped up around $80 a barrel. Amazing, truly. But a lot are saying that this will also trade up over the course of the summer. So when demand's high, go figure, prices are higher, oil going up. So who does that impact? That impacts basically all the stocks that are oil driven in the energy sector. So over here, okay, you can see this set of tubes right here going up and down and up and down, but you can see prices have stabilized up above, you know, right in here. This is an index, by the way, on energy. If I look at Exxon or somebody like that, oh yeah, moving up. If I look at Phillips 66, oh yeah, moving up. So just beware that you're going to pay a little bit more at the pump. All right. So everybody wants to see the Standard & Poor's 500. That's your proxy for the stock market. So we'll just do that one. So where is the S&P 500? Well, if you're measuring from the bottom of our last drop, which was right around 1013, 1012, somewhere right in here, this point right down here at the bottom, that's where we have made a bottom. Is that going to stay there? I don't know. I really don't. I'm just looking at this volatility saying it doesn't take much to move the market. You can see these gyrations have kind of compressed some. You know, I'm using charts. So charts are, I'm just looking at what's happening basically. But you can see that we're still down in the 15% range on the S&P 500 if we're measuring from the beginning of last year, January the 3rd. So the market has not recovered to all-time highs, but it has recovered some. And so we should be more encouraged with that and understand that, hey, you know what? This stuff moves around like crazy. If we look over the pond and say, look at Europe, Australia, and the Far East, this is an index, and you can look right here and see that measuring from their high point, which was right around 9/1 of 2021, right here, they're still down in the 14% range. So IEFA is a exchange traded fund that you can buy. iShares runs it, and it is the index for the Europe, Australia, and the Far East index. It's a way to buy into exposure for mostly Europe, but you know, Canada's in there, Australia's in there, Japan's in there, that kind of thing. All right, if we look at emerging markets, that's more of the Russia, India, China story. And again, depending on what you're measuring from, I measured from right here, which is June of 2021. So we're coming up on 2 years and still down in the 27, 28% range. So hasn't been a good place to be as an investor. And so just understand that most of the world's market indexes are down. We can find a few countries that are probably up if I dig around enough, but the major indexes are not showing any positive returns yet. So just understand, bouncing off of a bottom, there could be more to come, or that could be over. Not trying to be wishy-washy, just telling you that there's really no way to know yet until we see some stabilization. And there's a lot moving around in the world. Are they going to continue to raise interest rates? This war thing gets people unsettled. There's a lot of things to look at. All right, let's look at, everybody's asking me about gold, so let's look at gold. All right, so we're looking at a 2-year. Let's look at a 5-year of gold. So gold peaked right here, and that was 8/5/2020. So I don't know why in August of 2020 we had a gold peak. We had another peak right here, which was, give or take a day or two. That was something like the 8th of March last year, and it looks like it's trying to move up there as well. So we'll see. Gold is an investment. A lot of people say it's a hedge to inflation. I will tell you that it seems to be a hedge to the dollar. That's what it seems like happens with the US dollar. A lot of people are concerned about that right now, but you can see this blue line is a way for me to show you the pattern of the US dollar. So the dollar was going up, gold went down. The dollar went down, gold went up. I don't know. I mean, it seems to be an inverse relationship to me. We had a spike on gold. Dollar really kind of rallied off its bottom, so it's not an exact mirror image, but you can see it seems like when gold is down, the dollar's up, and vice versa. So pick your poison there. I don't really see, people are telling me that the dollar is getting crushed and all this other stuff, and I'm like, I don't see that, but maybe. I mean, I'm not trying to be a negative guy. I'm just saying I don't really. That's the dollar, and it looks like it's kind of right in this range. Sometimes it goes up high, but that's the highest it's ever been. So if you go back to then, it was 2022. Maybe people were afraid and wanted to own the reserve currency of the world. So who knows? But as far as saying that we're losing, the value of the dollar currently, and that helps our manufacturers, by the way. When the price of the dollar goes down, our stuff's less expensive in the world for them. So anyhow, that's kind of what we're having here, is stuff moving around everywhere. As far as what's going to go into the market into the future, most of the folks that I read still say that we're cruising into a recession. Most of the folks that I read tell me it's probably not going to be anything severe. And some of the folks that I talk to actually say we've been in this recession for a while. So again, they just printed up a bunch of money, tried to get us through COVID. I'm not saying it's right or wrong. I'm just saying that there's a whole lot more money in the ecosystem. And so we have to see some normalization before the world can kind of move along. Inflation, guys, I'm telling you, this might be the new normal. We keep thinking things might go down in price. Maybe we're looking at the price or something close to it, because I don't see that the Fed's efforts are crushing inflation. So a lot of it's labor. Some of it is the supply chain issues, but some of it also has to be a lot more money in our ecosystem and a lack of, labor on one part. It's hard to get somebody qualified to work. And then the other side of that is, a lot of people got out of the workforce. So yeah, anyway, don't want to bore you all day. Wanted to give you my views of things. And if you have any questions, as always, give us a call, 336-448-1086. Want to get off of this as quick as I can, because somebody said, man, that last one was long. So, okay, I'll make sure that it's a little shorter today. I hope I gave you a quick look at the world at large. And again, call us if you need us. Make it a great month.